Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced / trending or rotational? Is VWAP holding? Know that consistency comes from your mental framework, not trading strategies. GC plus one touch. GC plus one touch. I take 10 minutes break after every trade. Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced slash trending or rotational? Is VWAP holding? Maintain discipline regardless of winning or losing streaks. Turn FOMO into JOMO, joy of missing out. Right or right out. Right or right out. Right or right out. I get out of the position if it doesn't start to work out immediately, before it hits my stop loss. I get out of the position if it doesn't start to work out immediately, before it hits my stop loss. An edge is nothing more than an indication of a higher probability of one thing happening over another. Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced slash trending or rotational? Is VWAP holding? Every moment in the market is unique.
You're listening to the Anjuna Deep Edition.
Hello, you're listening to the Anjuna Deep Edition. I'm Ansha. We're welcoming a new name to the show this week, London duo Wayward. Respected across the dance scene as writers, producers and mix engineers, they've worked with the likes of Calvin Harris, the Martinez Brothers, Shanti Celeste and Eliza Rose. In fact, their work on Eliza's hit Baddest of Them All bagged them a Brit certified platinum nod. Away from the studio, they head up A&R at Silver Bear, the label home to artists like O'Flynn and Jasper Tignan. This week, the boys made their label debut on Anjuna Deep Explorations with the single Semaphore. and have cooked us up an exclusive mix to market.
Big trade.
As soon as I wake up, I'm like, yeah, everything's good. I just feel good about myself. I used to just get myself into trouble and stuff. And there was nothing really I could do or I wanted to do.
You're listening to the Anjuna Deep Edition.
Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced / trending or rotational? Is VWAP holding? You will grow more as a trader from the things you do outside of actual trading. Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced / trending or rotational? Is VWAP holding? My process is a better trader than I am. GC, weekly -1 touch. GC, monthly -1 touch.
This is Anjuna Deep.
Think in probabilities, not certainties.
I know we don't have a lot of data. GDP now, I think last on November 3rd came out at 4%. I'm not sure how they're adjusting their model because the data's not there. But that's the opposite of recession territory. What do you is this just bad data, or what do you think that is suggesting?
Well, I think I wrote a post about this yesterday about corrugated box sales, because they're widely recognized as kind of the leading economic indicator signaling trends in consumer spending, manufacturing activity, and kind of broader economic growth or contraction. If you look so far at the Q3 earnings, they're not looking great in the North American market. You have PKG business down 2.7% per day year over year in North America. You had IP, they were up a modest 1%, but their guidance was revised downward to minus 1% to minus 1.5% versus a previous forecast of plus 1% to 1.5%. And then we had SW corrugated box sales in North America declined by 8.7% year over year. And so if that's any kind of bellwether about the economy, it's definitely something to keep in mind.
Yeah, that's a great point. Although I get these brown boxes delivered to my house nonstop. I don't know why, but that's a whole different problem that I have. Craig, what other bellwether do we have? And we have car insurance, home insurance that are just keep on just sloping upward. Every single month. Look at the data. What other stuff is out there we should look at?
Yeah, look, we have an affordability issue in the country for a good chunk and increasingly growing percentage of the
GC plus one touch.
Oil prices being more tame than not. And I know the president talks a lot about low gasoline prices. It's a big deal, right? I mean, a big part of the daily and weekly budget for low-income consumers is filling up the gas tanks. So that is helpful, but electricity prices, are moving higher and likely to move higher still next year, particularly with this AI capex build out. That's going to continue. Insurance rates are crushing people, and so look, we have sticky inflation, which is making it more difficult for the Fed to rapidly bring down borrowing costs and cut rates, because as we see, they take down rates and the long end moves higher, yields move higher because markets are reacting favorably to it. So asset prices are still too high, insurance costs are still too high, cost of living is too high, and it's just a bizarre setup here for most actors in the economy. But the one thing that people are falling back on is gambling in AI stocks, right? Whether it's the call buying, whether it's the crowding, whatever it is, really to allow that to financial nihilism, right? To keep up with the inflation, people are resorting more towards those types of behaviors in order to catch up and keep up. And so we're definitely see that every day, every week with the call buying that's been going in. And now you have a situation where you have a lot of inverted skew in single stock names, whereby call skew is much more expensive than put skew for a lot of these names. It's a very rare, circumstance. It's taking place for, most of the Mag 7 names and for anything tied into the AI capex story. So, retail's done incredibly well navigating this, but we're getting into some dangerous territory here with respect to volatility and the volumes. And we start to get some of these corrections that we've been monitoring across different subsectors, over the last few weeks. Quantum, crypto. And look at Bitcoin this morning, down another 3%. And that's kind of a big liquidity tell there too. So, look, some choppy stuff here. When you see, leading stocks like Palantir kind of gap up on beats and then trade weaker, maybe it'll give some people some pause.
Yeah.
Bias check in. What is the current outlook? Are you trading what is? Are we imbalanced / trending or rotational? Is VWAP holding?
We need power. We need electricity to power all of these data centers. And I've been talking about this forever, is we're not prepared for this. They're throwing billions at this build out, but not at actually powering these data centers. And so what's happening right now is they are getting contracts with the utility companies, and that is at the consumer's expense. And that's why consumers' prices are rising, and because they're giving deals to AI centers. And overall, we need a build out. And I love uranium and nuclear. I think that's great. But we only have so many facilities in the U.S. that we can reopen and
Every
or
moment in the
extend
market
the life
is unique.
of. We need to build new facilities, and that's going to take time. That's going to take 5 to 10 years, and we need this power like yesterday. So, I think again, Anthony talked about this yesterday, and I've talked about this before. That I think it's going to be a big issue into next year.
Yeah, I mean, having said all that, speaking of uranium, should I preview our special macro guest today?
Yes, so we have uranium bull, Mark Wolbert, founder of Contrarian Codex. He is a wealth of knowledge in the uranium sector. So really excited to talk to him about what is going on in that sector.
Yeah, awesome. I'm looking at my quote board. It's just red all over the place, except in the treasuries. The treasuries are up a little bit. It just seems like it's we're in risk off mode today. I mean, the Bitcoin is down to uncomfortably low levels. Treasuries are the 30-year Treasury bond I have up on the screen right now. I'll talk a little bit more about it in the Edge report, but we're trying to claw our way back up. It still looks kind of bearish if you think about this chart here. We're still trading at a low 117 handle. The cash yield this morning, that last time I checked, was 4.674 for the 30-year, 4.09 for the 10-year, about a 58 basis point spread right there. But we're just sitting on top of this 50 EMA, so technically, even though there might be some rotation here, I don't know if there's going to be a lot of rotation here. And I guess I'll ask you guys your opinion. Craig, what are you thinking about the longer end of the curve?
Yeah, I mean, we know about the structural deficit issues, for the government, which are likely to grow if we have a recession and more people are forced, onto unemployment, and the government's going to have to do something about that. And so the long end, there are some pressures from supply. Tomorrow morning at 8:30, we get the Treasury's announcement for duration issuance composition. And while there's no expectation for Treasury to raise the amount of coupons selling that it does, at some point the government is going to have to think about terming out the debt more. I mean, we can't fund the entirety of the government in bills, and we've been moving to a bills finance government funding for the last several years here, and we're above 20% in bills, and so that's important to think. I don't think it's a catalyst for tomorrow, but look, I think if the economy continues to show signs of strain, ADP tomorrow will be a good tell on the labor market. Any momentum there, any revisions, we'll keep an eye on those, but I think bonds are likely to continue to rally here for the next little bit, with this dearth of data, with the government remaining shut. And look, Powell even talked about, the lack of data kind of puts them on a bit more of a pause. When it's foggy, you pull over to the side. But look, the longer the government is shut down, the worse the momentum in the economy is going to be for, certainly for federal government workers and anybody tied in tangentially to the government contracting sector. And so I expect we're going to continue to see softer data here, through the end of the year. Holiday spending probably not as robust as expected, particularly for the lower part of the K. So I think bonds are more likely to be, strong. And I think we're going to see a curve flattener, right? The Fed can't really, so rapidly talk down yields in the front of the curve, particularly after the meeting last week. Without the data, and so the inflation stuff kind of will remain sticky. So, but I'm more likely to think, we're going to see bonds kind of remaining firm here. The other thing we have to watch is the funding markets, right? The funding markets are exhibiting a little bit of a squeeze. Part of that was for month end. We saw a big take up at the Fed's standing repo facility of $50 billion yesterday, first day of the new month. That came down. We get two of those readings today, so we'll see if that pressure continues. But banks and non-bank financials are seeing some signs of strain in the funding markets. That leads to a little bit less trading, a little bit less leverage, a little bit less collateral value. And so that puts some overall pressure on our markets too. And lastly, that helps keep the dollar bid, right? I mean, we know the global euro dollar markets are, short of dollars. And so as you see retrenchment, the dollar rallies. We know that's as Tracy mentioned, people aren't set up for that trade. And so we could see a dollar squeeze with a funding squeeze here, over the course of the next couple of weeks. And that's more pressure on risk assets too. And, look, yesterday it didn't really show up as much in the equity markets, first day of the month, new money coming in, but now that money is put back to work again. And now I think we're seeing some more of the reality the events we talked about last week with respect to the Fed and some of the slowdown in the economy.
Yeah, funding is a big thing. It's funny. I'm at that age where I'm like logging into my Social Security.gov account, looking at my benefits. We started at 65. You're at full benefits, and then they moved up to 67. Now we have literally we have folks on congressmen and senators saying, hey, we might have to move this up to 70. So you guys might be stuck with me for a while longer. So I get to that.
Big trade.
Creeping up fast. Shai, what do you think about the whole interest rate scenario with respect to? not interest rate scenario, but the funding scenario with respect to the recent Treasury auctions and what those interest rate yields kind of showed up as.
Well, yeah, I mean, we have had semi-okay auctions, but still on the long end, kind of a weaker auction, meaning and anybody buying those from the government wants higher yields than what they're currently trading at. So, because they view that as riskier. And so we'll see if that continues. And one thing also I wanted to note, it's really interesting, just on the equity market, we're down 1%, give or take, in the S&P 500 right now, but we have the VIX up 11.5%. this morning, which is a rather large move, considering the smaller move in the index markets.
Yeah, break down the VIX for us, Craig.
Yeah, look, it's we've been talking about the VIX kind of diverging here over the last little bit here as the markets were making highs over the last couple of days and into last week. The VIX was sticky, right? And there was some signs of of concern. Now, part of that was call buying, right? Part of that VIX story last week was the call buying. It was call skew getting elevated, and folks were hedging positively for all the Mag 7, 5 of the Mag 7 earnings last week in the Fed meeting, and so VIX and volatility broadly stayed elevated last week because of that. And now you're seeing the opposite. You're seeing now, some rising concern, rising strain in funding markets, and so more hedging kind of moving out the curve. And I think when you have these potential blow-off moves that we've seen across a variety of these names, people are just either they see a bubble and they want to race towards it, as Soros has said, but more likely some people are thinking they're hearing some of these Wall Street banks talk about the bubbles, and people are thinking about it. And so I think you're going to get more hedging here for November and in December. Now seasonally, with less days of trading, we get some of the kind of natural hedge buybacks and lower volatility markets broadly, but November's can have some scary some scary trading here too. And I think that VIX being elevated here is a sign that people are not willing to give up on hedges yet. I think people are long and buying protection in order to stay long and protect against something some more adverse economic outcome.
Yeah, for sure. Shai, last thoughts to you. I'm looking at the metals complex right now, and there's a lot of negative numbers. Everything from copper, gold, silver, platinum. What's going on in the metals complex right now?
So we still have gold hovering around that 4,000 mark, and so I think this market is still going to again provide some two-way trading. It's been really good, since a low on October 28th, let's call it. So I think that's going to be a good market to trade. I think also when you have some of these kind of sell-offs and other markets, a lot to either cover
big trade
margins or you need to kind of sell everything else, and that's why I think we're also seeing a broad sell-off. And I think also all around, oil's still hovering around $60. That's nothing new. That market is still very flat. But I think it's, just risk off in general right now. And I think some of these creeping worries about the economy are showing in kind of the base metals like copper.
Yeah, got it. Well, we'll see what happens today. Copper's still just a little bit below that $5 level, which for some reason is making me a little uncomfortable, but we'll see we'll see how that goes. Chad, thank you for being here. This is the best trading community I've ever been involved with, and I've been involved with a lot of them. So thank you for being here. Good
Control
morning to
emotions
you.
during volatility.
We have a great lineup today. Mart Walbert is coming up in a second. We have T-Trades coming on. T-Trades, I met him in Naples. Fantastic young man. Merritt, Christian, Stowe, and Nick, and that's just the morning. So we got a lot of stuff to do. Don't move a muscle. We're going to do a really quick edge report. Craig, thank you. It's great seeing you this morning as usual.
Thanks, Jim. Appreciate it.
And Shai, I'll see you in a couple of minutes.
Sounds good.
All right, let's start out with the Bitcoin. The Bitcoin is stressed. I think I'll use the word stressed. That seems like a fair word right now. You know, we have an old area of support back here around 108,500. That lasted a long period of time, right? This was mostly all September, and we had to push back up. Strong trend channel down. We established
NQ,
another
minus
bottom
one touch.
around 106,500 with a really nice target wick down here on this particular, and this was on the 17th of October. This low was 103,740. We're driving toward that target wick. Oftentimes we get those, usually mostly intraday, but sometimes on a daily. And it looks like we're going to get there today because now today we fell out of bed right now. We're at a 104 handle right now. The low of the day actually was 103,910. So there's definitely people liquidating and just getting short this particular marketplace. You know, the volume profile is still not the greatest.
Minus one touch.
Immature so far today. It will mature as we go on. The VWAP is sloping downward here. The VWAP bands are sloping downward here, first and second standard deviation. We hit that Mentor Q one-day min, nice touch right there on the one-day min, and we're kind of stabilized right now. We'll see. You know, this bottom has been in for a long period of time, really since the London initial balance, but we're trying to break on through, and a lot of times when you see a pattern like this is the second attempt down to break on through so far this morning. Possibly targets are in sight. 0DTE put support at 103,000. S2 right below that. And then the major put support is down at 100,000. So this market has a will of its own, and it has some big wild swings.
GC,
so be
minus
careful,
2 touch.
when you're trading the Bitcoin today. I am bearish there for sure. I want to pull up the even S&P really quickly here, if I could find it on my screen. There we go. Let's let these charts populate a little bit. We'll start with the daily chart. Down fairly big today. Someone in the chat mentioned, hey, did we fill the gap? I think we filled all the gaps today. I mean, we're down on this, 70 handles or so. Right tapping on that 21 EMA. We broke the 8 EMA. We're trading well below it. We broke previous week's lows at 68.43 half, well below it right now. This is kind of a pretty significant move to the downside here. You know, we have that old kind of contract roll area support down around 66.07, long way away for sure, but you never know. Things could happen. So this is kind of the moving averages are sloping down. The stochastics have crossed over 4 days ago and now are below that 80 level. On the daily. Intraday, this is a small case B as in boy volume profile so far. Most of the volume action has happened going into the London initial balance and then all the way through it. The point of control right now is at 86.15, and we've had an awful lot of, this is a 10-minute chart, folks. I kind of toggled from 30 to 10 this morning as I was doing my early morning research, and we're right there. We're at 68.14 half. We're just finally kind of broke down a little bit. We have a little bit of area support here. We're trying to tag right here at 68.06 intraday. We do have targets here. We have that 0DTE put support on the downside, 67.80. Below that, we have S3, and S3 is approximately 67.61, and then really a lot of just empty space all the way down to put support at 6,700. Should this market turn around a little bit, we do have some targets to the upside We're south of that one-day min. Keep that in mind. That's an important level. But we have a high volume level at 68.45. Jacks 2 right above that. Blind spot 2 right above that. And S1 right there. So there's this area here where you have 1, 2, 3, 4 areas of interest, all kind of tight between 68.45 and 68.55. Should we get some kind of rally later on today? Jacks 3 above that. We get a breakout toward where we started this whole thing at. And then finally, we have at 6,900, the call resistance level of the E-mini S&P is maybe a super bullish target for today, but things are looking a little bit negative so far in the stock index futures, not only locally, but
GC,
abroad as well.
weekly
That
minus
is this
1
morning's
touch.
end report.
GC, monthly minus 1 touch.
Let's go back to Shai. There we go. Shai, we are back. We do have our special guest ready to go. Let's get him in here. Let's get Mart in here. Mart, good morning. How are you?
Good morning. I'm doing very well. How about yourself?
Pretty good, pretty good. Pleasure to meet you. Started following you on X. I'm learning more and more about your expertise. I'll be honest with you, I don't know a lot about uranium, and I know you're an expert. Start me off with where should I look for pricing, and what's been the trend of pricing recently?
Well, thank you for having me, first of all. And if you want to know more about uranium, of course, following me is a great start, but there's a thriving uranium community on Twitter where you can learn a lot. And with regards to pricing, if you want to have a good overview of term pricing and spot pricing, you can go to Cameco's website. Cameco is, of course, the biggest Western uranium miner, and they provide a price deck every single month. Of course, UXC and TradeTech do that as well. But with regards to price trajectory, it has been super positive. Basically, for term price, you asked in the near term, well, it's
Big
going
trade.
up. Term price was at $82, and now it moves up to $85 according to Cameco, $84 according to TradeTech. But I think that the most important price trajectory is, of course, the longer term. And what we've seen is just a consistent upward and to the right movement of term pricing based on just pretty much incredible fundamentals. Like the fundamentals that are driving this space are better than I have seen at any point since starting in this industry. And as you already alluded to earlier with regards to the need for more nuclear power, the sheer amount of support that we can absolutely discuss that we're seeing right now for nuclear power, not just in the US but throughout the world, is absolutely remarkable.
And so let's talk about the current supply demand dynamics in the uranium market. If people aren't really knowledgeable about this, because of the growth that we are going to see in nuclear as we see more and more plans to build out plants. So what are we looking at supply and demand wise?
We're looking at a supply demand deficit going out into pretty much as far as the eye can see, to the tune of tens of millions of pounds of annual supply demand deficit. And then I'm sure that a lot of people listening to this right now, especially those that are perhaps less familiar with uranium, because it is a very opaque space and it can be very difficult to acquire adequate information. But if you hear a supply demand deficit of tens of millions of pounds with demand right now sitting at roughly 190 million pounds, you could be forgiven for thinking, okay, but why haven't we seen a massive price spike yet? Well, that's because most of the price discovery that we've seen is tied directly to term contracting. Term contracting is around 75 to 80% of market activity, with the spot market that being the more, so to speak, visible price, getting up the remaining 20 to 25%. So what we've seen so far this year is even with term pricing being up, the term volume, so the contracts that are being signed by end users, by utilities, they sign these long-term 8, 10, 12-year contracts with these end users, with utilities. And basically what we've seen is that this year we've seen around 44 million pounds being contracted.
Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced / trending or rotational? Is VWAP holding?
It's telling me two things. One of the things that it's telling me is that we are moving up on relatively low amount of demand coming in, which means that once high demand comes in, we'll have an outsized impact. But it's also telling me that we have a long way to go when it comes to getting to potential replacement rate contracting. So replacement rate contract is
Big trade.
basically they go in for that aforementioned 190 million pounds a year to fully cover their run rate for that year. Over the past few years, we've not gotten that, and utilities have basically been kicking the can down the road by doing a few things. In the past, they've signed legacy contracts for uranium delivery. So if you sign a legacy contract at, say, $40, you're not going to sign a new contract if you have flexibility options, which basically means that you can take delivery of more pounds under that existing legacy contract.
Maintain discipline regardless of winning or losing
mobile
streaks.
inventory. They've pulled forward Russian fuel cycle material once the war in Ukraine started off, and they have imported some Chinese EUP. Basically, each and every single one of those levers are running out right now, which means that in the face of a massive supply-demand deficit, you are looking at EU utilities were only covered for 75% come 2027, and US utilities were only covered for 55% come 2029, which drops off a cliff to 80% uncovered by 2031. Now, again, for the people who are not really familiar with the space, 2031 may seem like light years away, but for the nuclear fuel cycle, that is basically 3 years, 2031 is tomorrow when it comes to preparing for all that fuel cycle material and preparing all that mine supply to make sure that we can fill this gap. And one thing that I think that people are not really accounting for is that this was already a strong thesis 5 years ago, back in 2020, back when we were still working with 1.6% compound annual growth rate for nuclear power. The recent WNA fuel report that was released in London at the beginning of September, great conference, very, very positive for the nuclear power space. I attended it myself as well. That 1.6% CAGR in 2020 and 2019 has grown to 4.6% base case scenario, now 6.3% upper case scenario. That is the sort of growth rate that needs to be met with a real and sustainable increase in supply. And to grab the US as an example, because you already mentioned it earlier in this call, the US is going to need a lot more nuclear power to power these data centers and to power just a general increase for demand for this clean and reliable power. The US over the past 3 years has produced, I believe it's 500,000, 200,000, and then another 430,000 pounds, and that is each year, which is not even enough to cover a fraction of the 50 million pounds that they consume on an annual basis. So I think we will see a lot more investment in new mine supply, basically because we need it. It is not able to be substituted. You have these nuclear power plants, you have all these life extensions, you have these restarts that are already mentioned in the form of Duane Arnold, in the form of 3 Mile Island, the Palisades nuclear power plant. It is all just a massive growth story that needs to be fueled, and I think that even though the term price is at $84 right now, I think it will go a lot higher before we even have a view of filling the supply-demand gap.
Well, this sounds, since we need all of this new supply, this kind of sounds rather bullish for a lot of the junior miners that are in North America. I mean, everybody knows Cameco and all the big names, but where do junior miners fit into this, and is price high enough right now that they can be profitable? Because obviously investors want them to be profitable.
It of course depends on the mine you have. For one example of North American miners is of course Energy Fuels. They are currently operating their Pinyon Plain mine, which is a very, very high grade mine for US standards on a relative basis, which of course has lower cost. But there are several other projects that if they want to bring them online, I think you need $90, $95 for a prolonged period of time to even have a chance to bring these on, not just economically, but also to make sure that these miners, these operators, can get adequate shareholder value return, because they have been through the ringer over the past 15 years. They've been through a grueling bear market, and now that prices are starting to recover, they now want to secure that shareholder value after such a long time in the doldrums. So Energy Fuels has done exceptionally well, not just because of uranium, but also because of the rare earth element angle. I run a newsletter service called Betraying Codex, where at the start of the year we bought some call options on this. They went up 2,900% because the US is so focused on securing those critical minerals now that it's not just rare earth elements but also uranium. And I think that especially with that recent announcement that we've seen regarding a binding term sheet to the tune of $80 billion to start building and licensing these AP1000 reactors in the US, I think that is a clear indicator of where the wind is blowing. With regards to your question, where the pounds may come from, I think that we will see several smaller operations in the US go forward at $90 or $95 plus uranium. I don't think we will ever get close to the 1980 peak of 43.7 million pounds. But then again, we don't necessarily need to get there because the US can also import pounds from Canada. We have NextGen's project Arrow, which is has a nameplate of capacity of around 28 to 30 million pounds. I personally have my doubts whether they will actually get to that amount or maybe scale it down a little bit. Also, the timelines may slip, and that is just the case of uranium mining because some of the juniors that you refer to, not just in North America, but also in Australia and Africa, we've seen timelines for these, especially these brownfield restarts. We've seen timelines slip, we've seen costs go up. So mining, of course, mining is very difficult, but uranium mining is, in my opinion, in a class of its own. And we're going to need higher prices for much longer so that these juniors can actually bring their mines online. But it won't be an easy route.
So let me ask this, and so in terms of the major global suppliers, you mentioned Canada. Is there, how are these trade agreements messing up the supply chain here? And then number two, what about domestically, and how's the permitting process here? Is it becoming more and more relaxed?
We've seen for worldwide supply, of course, these tariffs, these trade agreements, they have thrown some potential wrenches into the proverbial machine. But mostly these tariffs have caused some concern on the demand side. And what I mean by that is not necessarily that they've decreased demand, but mostly on the front that these utility fuel buyers, they're very, very risk averse. And these tariffs, they had some impact on some supply and they had some impact on these supply chains, which means that they took a step back to just see, okay, how will this impact our imports? Because US utilities are very, very dependent on foreign imports. Of course, the largest uranium mine in the world is Kazatomprom.
GC, minus one touch.
Cameco is a very, very large supplier, but after that, it kind of drops off a cliff when you're talking about public companies. So I think that going forward, I think that Australia could have a role to play. I think that Namibia will have more pounds produced over the coming 5 to 10 years. But overall, I think that we will need a lot more greenfield projects. And again, circling back to your second question, I think that permitting will be fast-tracked in the US to kind of get more and more pounds online to try to at least get a part of the supply chain for your critical energy infrastructure in the form of nuclear power to get that secured. So, for example, again, taking energy fuels as an example, the Roca Honda projects could produce 2.5 million pounds of uranium on an annual basis out of New Mexico.
Big trade.
But that requires a long permitting process and requires, of course, a lot of development still to be done at the mine. I think that the current administration, they're seeing the writing on the wall. They're seeing that you can no longer be fully reliant on just your global partners, allies, or otherwise. So that you need to produce as many of these natural materials as you can on the domestic front. So Roca Honda has been put on a fast-tracking, I believe it was called the Fast 31.
NQ, minus one touch.
31 natural resource projects in the US that they want to make sure that permitting goes more smoothly for. And I think we're going to see more of that.
Shall we got about a minute left. Any last minute thoughts?
Yeah, so just really quickly, how do the uranium ETS and kind of these financial vehicles play a role in driving a kind of spot volatility, if at all, compared to actual utility demand?
Minus one touch.
I think that the ETFs themselves don't necessarily play a big role, but I think that the spot physical uranium trust does play a massive role. So what we're seeing is that once flows really start, and also in part to your comment, into the ETFs, which Prot is also a part of, if they receive a lot of capital and they trade at a premium to net asset value, they can then subsequently raise capital and buy pounds out of the spot market. We've seen them raise an enormous amount of capital and stack an enormous amount of pounds this year. And I think that going forward, we're going to see more financial entities, not just the Sports Uranium Trust or Yellowcake PLC out of London, that are going to come in and they're going to see that this is a very tight market.
I understand the absolute necessity of these principles of consistent success and therefore never violate them.
So at that point, I think if you see a lot of financial interest out of all those groups, I think that it is a right tail risk that could send this market into a spike-like scenario. That is not my base case expectation. I expect a stair-step way upwards as more term contracts get signed, but it is a risk that I keep into the back of my mind, or a right tail risk that's going to be very good for the equity pricing, of course, but it is something that I take into account, and I think there is going to be a lot of financial interest in this space going forward.
Wow, that's awesome intel. I wish we could keep talking to you. It's great intel. Great meeting you too, by the way, and appreciate you being here with us early this morning.
Thank you, I appreciate that. And I could talk about uranium nuclear power for a few more hours, but I don't want to bore everyone to death with that.
No, not boring, man. It's fascinating stuff.
Very good. Thank you for having me.
I mean, how smart is that guy? I went from knowing nothing to knowing a lot in like 10 minutes.
Right? He's really good. He's really good. His Contrarian Codex Patreon he has. You can check that out. And if you go to his X handle, he does publish a lot of that open for everybody. So if you're interested in the uranium space and or the mining space, definitely go check him out.
Absolutely. Well, yeah, we cut and paste that link into the chat, so you guys could just click on it and you will be there in a second. Shai, awesome morning so far. Thanks for lining all that up, and looking forward to talking to you a little bit later today.
All right, talk to you later. I'll be in the chat.
All right, it is time. We have a very special guest today at Tape Talk. We have T-Trades with us this morning. Good morning, T. How are you?
Good morning, Jim. How are you doing?
Pretty good. I do want to remind everybody that today's segment is sponsored by the CME Group, where risk meets opportunity. Thanks for being here with me, my pickleball partner. I've been studying YouTube videos, man. Next time we're on the court together, we will be undefeated.
Yeah, we'll win next time for sure.
Anyway, you coached me through my first game, so you will forever hold a sweet spot in my heart because of that.
Appreciate that.
Anyway, let's talk about markets, man. Where do you want to start?
Yeah, we can start in some foreign currencies. So 6E. So let's see if my screen is up, but I'm looking for dollar to continue to trade to this high here. That was what we were watching last week with this little breakout. Has a nice V-shaped reversal, expansion, retracement, going higher. So with that, pound was obviously weaker, and it went and took out its equal lows down here in this range.
Big trade.
It's falling through those lows. So then that's what allows me to look towards the stronger asset, which is actually euro, and look for euro to also take out this low, as its correlated asset is not reaching for that. So I'm looking for euro to get a continuation lower into this low. It's already had that trend, but I'm just looking for that to continue. So dollar goes to the high.
So T, that low, I'm tracking back from August 1st, right? Approximately one spot, 142. Okay.
Yep. So that's just the previous month's low. So what I like to do is at the start of the month, since we just started November, I like to look at these monthly candles and how they formed, right? So our previous month was
NQ, minus one touch.
Continuation off of that. And then we can go into oil, which is
really quick, T. Hang on, let's go back to euro real quick. This is just kind of a special. I love this market. This sell-off has been 1, 2, 3, 4, 5. This has been a vicious sell-off for the last five days, right? And a lot of times when traders see this kind of magnitude of sell-off, they're like, "All right, can't go down any lower." Walk us through that. How it came. Yeah.
So normally that's what I like to see as well. So for instance, we have a nice aggressive sell-off here. I'm looking for some sort of consolidation, a retracement to continue that trend. The main thing here is we had finished off that monthly candle, right? So we have that monthly candle closing in this low. And so that kind of gives us that new range, right? We have a new candle that can expand. And then it's just that we're so close to this low that sure, we could consolidate, but I would prefer to just see us go take out that low pretty quickly. And then from there, we're either going to form a low and come back into the range, and we can go back the other direction as we're in this kind of consolidation range. Or if we continue to fall through that as well, then I will look towards pound as it's weaker and then look to trade it lower.
Got it.
So any other questions with
No,
Euro before
let's
we move
go.
on?
Let's go to the next one.
Yeah, so good. Let's take a look at oil as well. So oil, we've been kind of in this range, the past few months. We had a nice sell-off, which I talked about with Delhi here, and then this retracement and then this sell. So we had this range with a nice V shape, and I'm viewing this as a reversal right now. So I'd want to see this low
Minus one
if we're going
touch.
to trade higher this month, and that's just seen because this monthly candle is closing a bullish hammer candle, right? So if I'm looking to look long here on oil, I'm going to want to see price take out this low here and then form a low. And so then that would be the low of the monthly candle, and then I could look to trade that into our current month's high and our previous month's high. So with that,
those lows you're tracking what, 56, 57 bucks?
yeah, we can go down there and see. So that would be my target for today and tomorrow. Just looking to see price trade into 59.64, and so we're starting to form this continuation here. It's a bit through the daily range already, but this is mechanically what I look for in a continuation, which is taking out some sort of high and then a closure through those closing candles. So then I'd want to see this continue through. So, and then from there, if we form a low on the daily, then I can look to trade this the other way, as that's my model where if I want to see this be a bullish candle, I want to see a low form in this green box, which is essentially 50% of this wick here.
Yeah, I mean, I'm looking at a daily. I'm just a little worried. I mean, looking at the 8 and the 21 EMA are kind of tangled in love right now. We'll see how if they converge or cross. We're kind of at that point right now in a daily. Decent sell-off today as we're kind of risk off, but
yeah,
I'm with you on that.
So I'm not trying to predict this. I'd like to see it, but it's more so I want to see us trade into this low, and then let's say we fall through this low. That idea is invalidated, and I'll just be looking for it to trade to previous month's low. But if we form a low here, then that's something I can look to trade back to the upside.
Got it.
So similar thing on oil or not oil, silver and gold. They had the nice sell-off, and then we're kind of in this spot where, I can frame either way, but mainly what I'm looking for here is on the hourly. I'm just looking for price to trade into these previous day's lows. And then similar thing to oil here is we have this nice V-shape reversal here. So if we're going to hold this low, we're going to form a low here to trade higher. So I'm just looking to see, I'm not trying to catch a low, right? I don't trade these reversals here. If we form a low here, then I can look to trade a continuation higher into these previous day's highs here and this previous high over here in this range. But if we fall through that, then I can just look to change my idea to taking out that low. But I would prefer silver to form a low in here and then trade to these failure swings up here, all of this.
So, and what's your time frame thought when you could declare, okay, we formed a low?
Yeah, so with that, I'm going to look at the daily. So I normally base everything off the daily for me. So right now, I'm not really expecting this to be a reversal day, right? Because we just open up and we sell off. So if we go reach lower and then close back up, sure, it's a reversal, I can trade the next day. But most likely, I'd be looking for Wednesday to form that reversal. And then depending how it forms Wednesday, I could look to trade that or trade Thursday, Friday. So I'm not trying to catch the low. I'm just trying to trade the continuation. So it's kind of like this where we have a big sell-off, right? I'm not going to trade a long this day, even if it takes out a low. I'm going to wait for the next day. This forms a reversal. Then I can look to trade that. So it's the same thing if I'm trading to the downside here, right? I don't catch this reversal day. I'm just going to be looking for continuations on these days.
Makes sense.
So that's silver, oil, foreign currencies, gold, bit of a consolidation.
Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced / trending or rotational? Is VWAP holding?
Trade higher. If we fail to do that, go take out this previous day's low. I don't really have much of a bias on gold. It's just a consolidation. there's not much for me to base anything off of in there.
Yeah, I mean, are you looking at? I'm looking at last week's low, which was what 39.01.03 with the target wick dangling down there. You know, it seems like we're a long way away from that, but what do you think about the potential to get there?
Yeah, so it's definitely, if we fail to form a bullish setup essentially here, so after we take out this range low, then yeah, I'm just looking for that previous week's low. It's not that far. It looks far if you go to the weekly chart, but it's not actually that far. I agree with you there.
Yeah, so I get it.
And then as for indices, we can talk about that. We know we have a nice sell-off. I would say the only one that kind of gave that cleaner setup was...
You don't need to know what is going to happen next to make money.
Go to the daily and kind of explain the setup on RTY. Is we had this essentially range here. We take out the range high, we form a swing point, and then we are trading to these range lows, right? So that's where I'm just looking for RTY to kind of finish off this move, and take out these range lows. Now, the one thing I do want to talk about is I know a lot of people here watch the indices. If I'm going to try to frame something on the indices today, I don't want to try to short this really, because we've already made quite a daily range, our average daily range, 435 points on NQ. So really the only framework I could have on this is pairing it with some sort of volatility. So the New York Open, so something at 930, right? If we get some sort of opposing run lower, making some sort of shift, then I could look to trade that back into the range. It's just not that interesting for me because I like to align myself with continuations. This is a reversal idea.
Yeah, so let's play this out a little bit. So today, you know, at the end of the day, we're either going to, you know, depending on what the candle looks like, it could very well close on the lows and suggest continuation selling going into tomorrow. So with that as a possible scenario, what do you think a strategy would be?
Yeah, so the way I view it is pretty simple each day, right? So let's say we closed exactly right here. I just mark out 0.5 of the previous candle's range, and then I just look for two things. So it didn't show up. Let me just draw it one more time. So I'm either going to look for how the candle forms, because a bearish candle will open, make its upper wick, and then trade lower, right? We don't have a wick today, but it opens up, trades lower. A bullish candle will open, go lower first, and then trade. So there's kind of two options here. If we're going to have a bullish day, then I'd be looking for price to form a reversal off its previous day low. So price would open up, trade into its previous day, form a reversal, then kind of trade it back into the range, back to this EQ. If I'm bearish, I want to see price open up, not go higher than this EQ, because that becomes bullish, and then trade into previous day low and lower. So a good example of that would be, you know, we can take a look at pound, maybe euro, right? So
yeah. Real quick though, going back to RTY, do you trade RTY often?
I'll look at it. I don't really use it in correlation with the other indices because it does its own thing, but I will trade it on clean daily setups.
Yeah, I think this market's a little neglected sometimes. You know, we focus on NASI, we focus on ES, and then, you know, gold and crude and stuff like that. But this one kind of is like, this market is actually, from a technical point of view, it charts out really, really nicely a lot of times. So, you know, CME did a good job of keeping that in their wheelhouse.
Yeah, so a good thing to note is like last week, a lot of people struggled. If you look at indices, they weren't very clean, right? So NQ, Nasdaq, ES, YM, not the cleanest. But if you look at RTY, you know, it had a pretty clean setup where it reverses off its previous months or previous week's high, forms a reversal, and then just trends lower. So it was trending while the other indices were essentially just consolidating. So yeah, it's good to look at, especially when the other indices aren't really aligning. Yeah. But yeah, what I was saying with going into this next day is I was going to use euro as an example where if we're going to trade lower, or let's find a better example. We can just use RTY on one of these days. Well, essentially we can just use
GC minus one touch.
Big trade. If I'm bearish, I want to see price open, respect this area, and then trade into previous day low. If I'm bullish, I want to see price open, reverse off that previous day low, then I can trade it higher. So that's really the scenario I trade every day. So if we go to NQ, if it was to close like this and we were opening up tomorrow, I would just be looking do we open up? Do we trade higher first? And I can trade that into previous day low in a continuation. Or do we trade lower for my reversal here? And I can trade it back into the range. It's pretty simple. It's just two scenarios most days.
So let me ask you, we got about a minute left. Did you ever look at the Bitcoin, CME Group's micro Bitcoin?
What is that? What's the ticker for that? Is it MBT?
MBT.
Yeah, we can take a look at that. So I was talking with a few people on Bitcoin, but this is just a range to me. We took out the range high. We have a nice V shape. So looking to see price move lower. And you can see that as, we get a very nice sweep of this high. We form a swing, trade lower, consolidation. This is an engulfing candle. And so then the same thing here is if I want to trade this day lower, I'm just looking for price to open up, form its upper wick, right? So it opens, goes higher first, then you can look to trade it into previous day low and lower. So I would still be looking for Bitcoin to go trade into this low because currently it's not reversing off this low, right? So it just makes sense to see it reach for this. And then kind of the same thing of how I approach most markets. Do we get a nice V-shaped reversal off this to trade it back into the range? Or are we going to get some sort of retracement to then trade it lower, right? And a good example of that was oil here, right? We hit this low, we just retrace, and then we get a continuation.
Awesome. Awesome stuff, man. It was great talking to you, man. It was great meeting you. Great talking to you. Looking forward to having more follow-up conversations over the next several months with you. So thank you for all your great intel.
Yeah. Hope you guys have a good one.
All right, man. T-Trades, everybody. Follow him on X. Terrific analyst, trader, young man. Grown to love him. I just met him once. So we're ready, though. We are ready to trade the open. Let's get Merritt in here. Forgot about that. Sorry, that's bad. No, it's my fault. Merritt is with us again, back-to-back days. Chris as well. Christian, how you guys doing?
Good, Jim. How you doing?
Not as good as Merritt.
I know. Anyway, so I
In
think we
queue,
all
minus one
kinda
touch.
survived the force that is PAX yesterday
Minus one touch.
afternoon.
He likes to, and I've seen this a lot, and this works for people. And I was actually thinking about it. It's cool. He's one of those guys who, the way he processes, right? It's like verbally, it's out loud and whatnot, as opposed to probably like Chris and I, right? We're very like internal with those kind of things, and then, it's funny. Different people approach that stuff different ways. Yeah.
I was on the floor 3 lifetimes ago, 1980, 81, 82. And when I hear PAX talk, this is the pitch trader back then, the way they talked, the way they expressed themselves, their enthusiasm, their guidance, and the way they did it. And most of those people, I mean, a lot of them in my generation have passed away, but when the pit ended, most of those people could not transition to the screen, couldn't do it. They tried, some of them tried, some of them didn't. A lot of bad, kind of sad stories there because you had a profession that you wanted to continue on and you couldn't. But PAX did. So it's a little bit unique having him. I know he's a different breed, man. I mean, for sure. But I just wanted to make sure you guys survived him yesterday.
Oh yeah, thriving.
Yeah, awesome. It was great.
Awesome. Anyway, what are you guys thinking for today, man? Woke up red today.
For sure. I think that the indices were, look, if you go back and look at what I talked about, was it 2 weeks ago or was it last Tuesday? I don't remember, but we were looking at that. Look, the yearly, or as Cordelli likes to say, look it. We get to that yearly +2, right? 2 standard deviations away from the VWAP for the year. That's just not a place that price is comfortable sustaining more times than not. Doesn't mean that it's a guaranteed trade, doesn't mean, blah, blah, blah. But it's a big deal. And so that's what we did. We went up there, we tagged that, we put in a couple day balance, and then kind of a big key, and what we talked about when we talked about the market getting into those highs is, yeah, it's You never want to just say the market's too high, let's short it. Right? That would go back to what someone like Pax would say, right? Don't pick tops, don't pick bottoms. That would go to what T trades, what he just showed, what he did. He doesn't pick the top. He looks for something of a reversal from an area, and then he looks to play the continuation. So what I'm saying here is, when we get to real extremes, no matter how you define it, if you do it in a NADRO way like me, if you do it some other way, it's really important that you look for confirmation of the reversal starting to happen, right? So for me, market profile, seeing that, couple day balance, and then a couple day balance lower. The market is showing us they can't hold those lower prices.
I
So
act on my
last night,
edges without reservation
if you were
or
trading
hesitation.
in the European session and you were able to catch this little guy right here, this breakdown and pullback to this level, my goodness, that was the lower edge of a couple day balance right here at 68.70. Just a gorgeous trade if you could catch that. Obviously, I wasn't trading at that time, so here we are. But anyways, I'm being long-winded, but it's an important point to watch, not just like where we're at today, but how we got there, and week-to-week kind of continuation of the things that we're saying and listening to and watching. And so here we are. Today, I'm going to be looking at, I don't know, 68.40, something like that. Right now, we're a little low short-term. Let's see if we can pull back. I'm going to be watching for pullbacks to short, looking for continuation plays in the
GC, weekly minus 2 touch.
targets,
GC,
big
monthly
trade
minus
are
2
much
touch.
lower, given where we're coming from off those extremes. But right now, it's just kind of tough for it to keep going down in a straight line. So I think some type of bounce to look for good places to get some short risk on, to look for lower lows.
Yeah, and the point you brought up is more relevant than you think. I was a commodity broker for 20 years, and I would talk to retail or independent traders across, everywhere on God's green earth for 20 years, 10 hours a day, 12 hours a day. And I often would get the call, Jim, I'm thinking of buying the 695s because it can't go any lower. Well, that's not a strategy. What do you mean it can't go any lower? Of course it could.
Yeah. Hold my beer. Yeah.
Anyway, Chris, how you feel? What are you thinking about this morning?
I agree with a lot that Merritt says. That 68.40s big level. I'm seeing that too. That would be a beauty of a short. We are pretty extended. Can we, hold here, maybe take a new low and maybe reverse and get a bounce, or we continue lower? NQ is at its gap low. So if we do form acceptance here and we can't really produce that bounce that we think can happen, then we're going to go most likely to that gap close, which is still a bit lower, and that would drag ES lower. So have to wait and see what it sort of how it sets up. But I agree with what he says.
Yeah, that totally makes sense. Well, I appreciate you guys being here. I appreciate what you did yesterday, being with us for so much, a huge chunk of your day. It was awesome. Everyone in the chat, thank you for being part of our community. It's been a great community. Thank you for the thumbs up. Thank you for the subscriptions, and then your participation in the chat's been great. This community helps each other out. It's not caustic, negative, or egocentric. So that's one of the things that makes it so great. Thank you for doing that for us, guys. Anything you want, anytime you want to ask a question, pop in here. And Merritt and Christian are professionals. They're really good at getting in there and talking about whatever's on your mind, no matter what it is. So thanks again, guys. Best of luck today. Trading the open. I will be in the chat, and I will be taking notes, man. Rooting for you both.
Thanks, Jimmy.
Thanks, Jim. Take care. The champ is here. The champ is here.
You and I talked about this a little offline, but I was so tired after yesterday. I was absolutely wiped. And I don't normally feel that way trading. And we were trading freaking sim. You know what? I have another analogy with that. when I go play like a friendly poker game with friends, $20 buy-in, right?
Yeah.
I cannot tell you the number of the amount of money I lost that day trading or made that day trading, right? And then $20 buy-in with friends, my hands will shake when I'm like got a big bluff on or going all in. It's so funny how it, I don't know what to say about it. I just think that's it's weird. It's funny. Do you ever experience stuff like that where stuff doesn't really matter, but then it gets to you the most?
Yes. I was really tired as well yesterday. After I'm just like, oh, how can people do this every day? And also the intensity and the focus that we were applying to, again, these micros and the sim account and trying to look for trades.
A lot of chop we had to deal with yesterday.
Yeah. So that's why I myself stopped trading like the last 2 hours. I can't be. I'm on my third kidney. Okay, I can't be focusing like this on price action. That's not rewarding.
Yeah, I hear you. And that that probably plays into what some people have made the argument against some of these arena challenges and things that are going around. Is like, it could be a thing that like reinforces bad habits, right? It could, if you allow it to be. So I think there may be like a touch of that with you yesterday, where you're like, look, this is not my thing. This market is not conducive to my thing. So I'm feeling super wiped out and fatigued. I'm not just going to sit here and beat myself up, right? Taxing mentally. So I hear you. I'll tell you what, I did not like being chased. I would have much rather been in a position where I was not in the lead and was like chasing somebody. That would have been a lot of fun. I did not like Nick coming after me, late day surge. That was stressful.
I don't think he would have reached. I mean, you were with the action that we were getting and into the close and how far you were ahead. I don't think we could have. Any of us could have reached.
Okay, you wanna talk markets before we? I know there's some questions in the chat, but we got
NQ -1 touch.
Open. You want to kind of get
-1 touch.
Get down and dirty. Anything else you want to?
Yeah.
Walk us through.
Let me share my plan with them.
Yeah, let's do it.
All right, guys. So we finally broke down from this wedge that we were in yesterday. I mean, this is what we were stuck in during the stream. We did that morning push higher, ended up being a failed breakout from this wedge for ES and NQ. We then broke lower. We're now into the first area of support for NQ from that, in my opinion, from that wedge breakdown, which is prior week low and the gap low. The gap low, and we're sort of negotiating here. Can we form acceptance here and break lower, or is this the first low of this new downtrend? Can we bounce? Above this overnight resistance, which is at 790s, I have 860s, 850s area. That is sort of a good back test area where we can bounce into, create a lower high. For ES, we are back into that 6790, 6808, which was prior all-time highs. We tested that prior resistance here perfectly. We bounced. Can we hold here, maybe create a higher low against the low, and then get that bounce up into 6840s, which is that prior gap, but which now is the gap resistance, in my opinion. We'll see the hourly here, which is my trade plan for today, is for those of you guys who know my approach now, we are in a hourly 9MA downtrend. This is the first lower low here. So we did get a rejection here at 790s. We put in our lower high. From a trend perspective, this is the rejection that can possibly lead to either for scenario one, a low here, maybe a higher low against the 640s and NQ. If we can create a higher low, we can push back up to 790s. At that point, we will need acceptance to be able to push up to 860s, 860s. I would say 860s, 870. It's a range right there. If we
Bias
do
check-in.
not create a higher
What is the
low,
current
we
outlook?
take out the low,
Are you trading what is?
maybe set up
Are we
some
in balanced
divergences and reverse
slash
back up,
trending
but
or rotational?
if we form
Is VWAP
acceptance at the
holding?
lows, then I think we'll see a gap close. And then for ES, scenario one would be the same thing. We have strong resistance here from this overnight action at 68.18, 68.20 area. Is this a potential higher low? If so, we need acceptance at that 68.18 to push back to that 68.43, which would be a great area to look for the other side. If we form acceptance at the lows, then I don't see why we can't come back down to 67.60s and then have a big area at 67.40s. But it'll depend on whether this is a higher low or not, and then where we form acceptance at the overnight highs or into the lows to then get the next major directional move. That is it for me.
Nice.
I continually monitor my susceptibility for
question
making
you.
errors.
Well, I haven't looked at the chat, but I want to know, what would you consider a gap close? Because I see two things here. I see the prior act structure highs I'm talking NQ here at 570, but the actual close before the gap that occurred the next day is at 525. So, sir, what to you is the actual, if we were to cross it, a gap close?
I'm not sure why we have different numbers, but so I use the pit session only. So my gap fill, I think the standard Jim Dalton market profile approach is the day's range, and that's for me pit session only. So that's around that 26.014, right around that area. So that's the gap close in my mind for NQ.
26.014. Let me go back to that.
The low of day from yesterday's pit session. That was kind of that Sunday night low as well. They were actually kind of right, almost at to the tick, the same spot.
26. What?
014.
Oh, I don't have that.
This is one of the benefits we talk about in our community sometimes, and on the desk, is when two traders have different levels for these things. That's good information. So we're talking about yesterday, right? You're not talking about
no,
like
the gap from Friday, October 25th.
My bad.
Because we're into that gap low from that Sunday, and that's what we're currently like negotiating. So that my question for you is to help everybody is I see this question a lot, is what it would be the gap close.
I see. So on the downside.
Yeah.
It's the upper end of the pit session from that day around 571.
Okay. So you wouldn't consider the actual close?
I don't. No. Like the standard operating procedure for profile people, for market profile people, is the edges of the range is where gaps are versus getting to the closes.
Okay.
I don't think there's anything magic. I think, quite frankly, I think gaps are easy to spot, and I think people place too much emphasis on gaps. That's my opinion.
I think they're great for some lower time frame reversals.
So far, since we cracked, it's been unable to kind of hold or get back into, if you will, the huge gap we had between the 24th and the 25th, right? So that's actually been that overhead resistance around 25,800, and then 570 is the low edge.
570. So, yeah, we're bouncing from that again.
NQ is interesting to me. It's in a very different place than the S&P is. NQ actually has some substantial support right here. whereas the S&P has actually broken down areas and is clearly in a more of a bearish place. So from a NADRO narrative perspective that I use as a lens, there's quite a bit of dissonance or difference between where the S&P is and where the Nasdaq is. Both of them with room to the downside on the highest of time frames for a healthy pullback, a healthy mean reversion. But 6850s, right, to 6840s is the major resistance now on the medium term to lower time frame for the S&P. While on the Nasdaq side of things, that same reference that I'm mentioning from multiple time frames, the Nasdaq has only reached it from above. You get what I'm saying? The S&P is broken through support, so we're bearish against that. It's now resistance, but the Nasdaq is sitting at support, yet to break it down. So that's going to be interesting to watch how that plays out.
Can you share what that support was for ES that you said that it broke while NQ's at it?
Yes, it would have been the quarterly developing value area high, so the quarterly +1 standard deviation from VWAP, and the monthly prior value high at this point. So value-based, VWAP-based things.
Yeah. What level is that, or range?
In Nasdaq?
Yes.
25,720s.
And ES?
Whatever those levels were I said earlier.
Oh, the 43? 40?
68, 40s to 50s.
Interesting.
Yeah.
I see ES at support and NQ not yet at support. So it's interesting that we see the opposite.
Nice.
I mean, NQ does have support here. I can see that. But from a trends perspective, for me, NQ can, it's like real support is this 500, 530 area.
You know, it was a nice, again, overnight for those of you in Asia or Europe, was the gold play. Gold has put in, if we go to kind of I'll pull over a longer term chart, a really nice balance, as you can see, going all the way back to here. Let me get my little drawing tool. Right, see this volume right here, this ledge, right? That's from here, probably from this wick. This got through it, but then fails, and you put in this guy, this guy, this guy. See what I'm saying? So that's a major deal. And so to break that down and to start to then hold that level below, that's pretty good stuff here. If you were, you know, trading last night and available for that kind of an opportunity. The problem is gold is at some support levels. Tough to, it's kind of not really confluent between the structural breakdown and now where we're at on some of the VWAP locations.
GC minus one touch.
In these areas. What do you say, bud?
I'm saying good morning to chat. Hope everybody's doing well.
Yeah, we're back. We were here all day. We're back.
They got us in overtime.
Mm-hmm.
That's a merit question.
Let me scroll up in the chat. I know there were some good questions. So Leo was asking about back testing. Have you ever done much like official like back testing, Chris? Because I have not. I let him know that's not my area of expertise.
Really? Yeah, I spent a significant amount of my time back in the day doing that.
Okay. Well, the question is, how would you recommend extracting a statistical edge? Wait a second, that was a different question. I know he asked Yeah,
no,
how
that's
do
a
you
different
recommend
question.
performing a professional back test? He asked about some of the references that I use and stuff, but I can't speak to it, so I'll let you take it.
My back testing came from identifying the parameters that I wanted to see how they would perform, what would be their positive expectancy, and then just go back manually and track that.
What do you mean specifically go back manually and track it?
Like go back a year and track price action as those parameters were met. What was the outcome from the entry to potential targets and the stop?
Statistically, like with a back testing tool.
Oh no, I did mine manually.
Okay, so you did official quantitative back testing to kind of find things with edge, and then you went to more of a manual.
I get out of the position if it doesn't start to work out immediately before it hits my stop
notice all the
loss.
features and things like that. Is that what I'm hearing?
More raw than that. I just, my idea of, let's say we're extended, it's pretty much putting ideas together. Okay, well, what's mean reversion? Since I focus on trend, I wanted to say, okay, what are the systems to create for a trend in the trend that we all participate? We all have different views of it, but there is a bullish trend following strategy. There's a bearish trend following strategy. There's a mean reversion bullish trend following a system. There's a mean reversion bearish, right? There's
big trade
divisions of each system. And so I want to say, okay, what do I need to then do to backtest a bullish trend following system? Well, a idea that we all know is buying pullbacks. What can that look like? Is it a certain statistical percentage from the highs to the lows on that pullback? Do we typically bounce on a 7% pullback in a stock, or in point system for NQ, that would be maybe 300 points. But I would create different scenarios like that to see where I can then backtest manually and see, okay, if we like a big one in stock trading, which I apply for futures, is in a pullback after a recent push higher, we usually come back down, take out, let's say it's day 3 of a pullback, we take out that prior day low and then have a big failed breakdown there and reverse back up. That's sort of like the higher low, right? So my system is pretty much buying that higher low on higher time frames and buying that lower time frame pullback into a larger time frame support. So that's pretty much it. I had to identify the conditions for where that parameter would succeed in, and that was if we break out of a 2 or multi-week range and we have a 3 to 5 day extension, and then the first pullback is 2 to 3, 4 to 4 or 5 days, etc. I have to create conditions for what those were. What's a 2 to 3 day pullback? What's a 5 to 6 day pullback? And then identify the parameters for that specific setup in that buying area.
I'm old enough that I'm able to admit that I used to print out charts and get a nice thick piece of paper and shift it to expose bar by bar to train myself at kind of, that was my market replay in the early years. Do you use a volumetric approach for futures? Can you explain it to me? I use volume profile, footprint to enter more precisely. I look at the dome, similar approach to Axia. I don't exactly know what volumetric means. I guess that means mostly based around volume-based metrics. I use volume-based charts. I look at volume profiles. My order flow, I don't use a dome. I don't use a footprint. I focus mostly on a thing called cumulative delta, which is just that information on the lower pane of my charts right there that you can see. It's a different format. Same data, different format. At some point today, I'll do a walkthrough on a little bit of how I trade. I hate to do that because I feel like I do it a good bit, but at some point today, when it's quiet, I'll do that for you guys. looking through these questions here.
Yes, Brian, and pretty much that. What room 550? I never ran Python code.
I've done a crap ton of, like, for example, the custom indicator I have on the price charts, the little bubbles and arrows and stuff that you can see on my charts. I've done a ton of work, mostly in Python,
big trade
to do things like that.
GC weekly -2 touch. GC
Big
monthly
trade.
-2 touch.
Back testing, but I've done a lot of quantitative work to. Here's my 20 years of experience. Here's what I know I want to kind of look for. How can I force out the math from myself? How can I extract that and iterate on it with tests visually to plot something? If X, Y, Z, and A and B and C happen, yes, that looks right to me. No, it's missing one here. Why should one be there? What do I not have in the math? What filter do I not use? Things like that have been very helpful for me to refine my process and things like that.
Big trade.
NQ weekly -2 touch. NQ minus
big
1
trade.
2 touch. NQ plus 1 touch.
Plenty.
NQ minus 1 touch.
Ding, ding, ding. Here we
NQ
go.
plus 2 touch.
All right, let's see what we get. See if this is a higher low.
Big trade.
We can continue to hold that 700 gap low area in NQ or break lower.
Gold, the big mover here. Austin, Austin's asking about Rinko charts versus range charts versus tick charts versus volume charts. We could throw time-based charts in the mix there, the standard. There's no magic bullet when it comes to those things.
Big trade.
Just not. I think the problem I see that retail traders make over and over and over is they think that, or even worse, somebody has told them that something like, oh, this
big trade
Rinko setting
big
is
trade
the bomb, right? This Rinko setting makes you print money. No, it doesn't. There's no such thing as some form of Rinko or, you know, whatever tick chart, whatever volume chart. There's not.
You're listening to
There
the
are pros and
Opportunity
cons
Edition.
to visualizing your data in certain ways. I prefer volume-based charts personally,
big trade
for certain reasons. But I don't think that they're magic or
Big
do
trade.
anything for me that gives me, you know, an inherent edge just from the bar type.
big trade
That 700
Big
can
trade.
hold an NQ See what it does into London's low.
Bias check-in. What is the current outlook? Are you trading what is? Are we imbalanced slash trending or
Big trade.
rotational? Is VWAP holding?
Sellers certainly pressing hard in the S&P.
Big trade.
Well, someone asked earlier about
There is a random distribution
specs
between wins and
for
losses for
their
any given
computer
set of variables
purchase
that
for
define an
trading or
edge.
whatever. For most applications, you don't need a super powered computer.
NQ, -1 touch.
You just don't.
-1
For
touch.
trading stuff. It's not a huge resource hog. I'm still using. I have a 2 machine setup. I have two monitors up high, and they're running on a PC that I built myself in late 2019. And as you can imagine, it doesn't have crazy specs. It was top of the line kind of when I built it then, but it's I suppose below average right now. And then I have a Mac Mini or whatever, and I have 2 monitors, my lower monitors.
All right, looks like we're going for that low.
Yeah, obviously prioritizing RAM, I think, is important.
Yeah, that's more important than the graphics card.
Yep, and even storage these days, we're using so much cloud-based things. I don't feel like you need a huge storage. It's also so cheap. Who cares? Get a terabyte on it. Doesn't matter.
Big trade.
Buyers coming in, the S&P.
Big trade.
Back above 700. And then Q. Can we hold? Still heavy. I'd love to see higher to short.
Big trade.
But if we can't get going, then we're probably going for new lows. That breakdown last night was beautiful.
Yeah.
Just being in that.
Little 100 points in the S&P. I'm looking across several markets, guys. I'm not seeing much for me from a narrative perspective.
NQ's getting rejected again. That buying that we saw is not looking strong enough. It's a rock throw away from new lows, so
I bet ES takes out 68.20s before it takes out the overnight low. You want a side bet?
no, I I like it.
Big trade.
Let's see what the chat thinks.
Okay, what do we
First to
bet?
take out 68.20 or 67.86.
Big trade.
First to take out 68.20. Which does the S&P take out first? Austin, 68.20 or 67.86?
I think you just want some action like yesterday, right? You're
Yeah, I'm like
craving it. I need it.
You don't have to type in the chat. They'll get us a poll up. That way we can see the percentages rather than try to read the chat. We need our own little poly market going here.
Yeah.
Oh, wait, I guess we have that. I guess we can just trade. Oh, but that's no fun, though, because then we don't, like, directly exchange the money between a small group. So
Big trade.
Which one's it closer to? I think it's, like, right in the middle, huh? Pretty much.
Big trade.
We're seeing a reversal attempt here. NQ's leading, triggering a
NQ plus one touch
here on the 2 minute. Hold this 720s and we see 790s. That's what I'm thinking.
Big trade.
See what happens at London's high or overnight high. Reject back down from there, or if we can form some acceptance, then push to 68.40s in ES and 860s in NQ.
Oh, the poll's up, but now we're too close to 68.20. It's worthless. Everybody's gonna vote 68.20 now. Of course, Jacob. Of course.
Big trade. Big trade.
All right, let's see what happens here at 68.18.20 and see if a reversal sets up.
I don't know about the depth of the book, fiber optic, but it's above average volume. In the S&P, that is. I'm not gonna lie. I feel a little bit off today. I feel like I don't feel super sharp. I don't know.
There's too much brain power Monday.
I think some of that is like actually a little bit of FOMO when I have that feeling right now. There's just not really anything setting up for me, and I I'm on the stream. I want to trade. I want to make money. I want to do all those things, and so there's this feeling of like, well, something's wrong.
Big trade.
Something should be available, right? So even me, after all my years of trading, I have to deal with emotions like that and try to be self-aware and try to look at, okay, you are feeling XYZ. I'm not literally touching the person XYZ, but I'm feeling a certain thing.
Yo.
I'm feeling up.
I act on my
XYZ.
edges without reservation
And,
or hesitation.
No, on a serious note, you do have to.
Hey, talk dirty to me.
Big trade.
If I could get the point out, you have to, whenever you have an impulse or a strong emotion, figure out the source of it. Where does it come from?
Six Trading says, back in college again, Merritt?
Oh. 6, 7. We were walking around trick or treating, and like every 14-year-old you passed. 6, 7. Cool. XYZ files a restraining order.
All right, ES back into that 1820. We need acceptance here to push up to 40s. At least have a sustainable move higher and not a failed breakout. And Q hasn't taken out that 790s overnight highs yet.
Big trade.
NQ plus one touch.
I'm interested in a short here until we form some acceptance, but
sure,
NQ's not giving that my setup here.
Big trade.
It's certainly the timing of a short entry for me. I'm just not interested in the trade. Got the algo firing off. Seller stepping in on the delta right here now.
Big trade.
No, gold is not halted. Gold has a below average daily range so far today. Gold is far from berserk. Gold's just doing gold things right now. That's all. That's a good word. Berserk. And pulled that one out in a minute.
Yes, is leading. Look at that. What do we think? It gets to 40s here?
Come again?
Do we think it gets to 40s?
In the
Big
S&P?
trade.
Yeah.
At this point, yeah, 33 to, yeah. 33 to 45 is a very reasonable place. If I put
Big
on
trade.
any trade today, it would have been this long off of the open here. Well, six to 9 minutes after the open. That'd be the only thing that I would, in hindsight, look back and say, yeah, you could have scalped it.
GC, -2 touch.
You know, I don't know what the deal is with COMEX in general or gold or whatever, but that has been the instrument that I've seen over the past 6 months or so that people talk about having like some data issues and stuff with across multiple platforms, multiple data feeds. I don't know what the deal is, but that seems to be, there's something there. I don't know what's up.
Crucible, we talk about acceptance probably every week.
Yeah, I created the term.
He created the term.
You see, gold is still moving on my chart.
Big trade.
Chris, thoughts on PAC's 15-point ES and 60-point NQ rotations? It makes sense. I've done a study like that, and the rotations that I found were 6.5 points in ES. I would say 6 to 7. So double that would be near that 15.
It depends on what time frame you're looking at too.
Yeah, and depends on well, for me, for trend perspective, depends on volatility. If volatility is high, the rotations are wider. But for
Big
NQ,
trade.
my average rotations that I have found are 30 points, and his are 65 points. So maybe I'm just looking at a internal rotation from his view of rotations. But I would say it's 7 points for ES, NQ 30 points, and his are pretty much the same.
My take is that average doesn't exist in a sense, right? If you take the average of a bunch of huge rotations and all the small rotations, you get a number somewhere in between there, right? And so average is not the ideal math, I think, for rotations. I think you want to look more at something like median. I think is much better fit. But what do I know?
All right, so we're moving higher. If we can get up to 40s, I would short that in ES. I would also short 860s in AQ on the first test. So I'm going to be waiting for that if we can get a continuation here.
Big trade.
Beautiful bounce.
Big trade.
Bias check-in.
All right, so I'll be
What is
looking
the
for
current
Big
outlook?
trade.
short up
Are you
here.
trading what is? Are we imbalanced slash trending or
Yep.
rotational? Is VWAP holding?
NQ's a bit stronger.
Big trade.
Let's see if we can set up a bearish 9MA reversal setup for me.
Big trade.
You guys catch this long? Pax uses the 15 minutes. Maybe that's why
I pay
his
myself
rotations
as the
are
market
double,
makes
pretty
money
much double
available to
mine.
me.
I'm looking at the 5-minute.
Yeah, it's entirely time frame dependent if you're actually doing math on it.
Big trade. Big trade.
I remember, what's his name? Harmonic rotations guy. He used to run like spreadsheet studies of,
Big
all
trade.
that kind of stuff as well. Yeah, what do we have in 5 minutes? Jolts? Jobs numbers?
Big trade.
Yeah, the chat was what, 50 last time I checked, 52% bearish coming into the open. I agree. It's a bearish environment, but like I said pre-market, it's probably needs to go higher to find sellers, right? First. So my bear zone at this point is right here up until 68.50s. So anywhere, it's a 20-point range. We've now entered 68.35 to 68.55, roughly.
While I wait for this bounce to end, I'm just managing my swings.
+2 touch. NQ +2 touch.
Seeing a good bounce across the markets, but this is an area that I want to short. NQ has already reached that area. ES has not yet.
Big trade.
I wanted that 40s, but I'm open for my setup here. We'll see. Just gonna keep waiting until we get. So far, we have a break of this. We're pushing into that first higher high. Could possibly get in that higher low, and then see if we can push up a little bit higher, create a second higher high, and then maybe at that point sets up a mean reversion back down. So let's just wait and see.
Could be the top in the turn there. I'm gonna opportunity cost bet that it's not yet. I think there's more more capitulation to happen before we see the top.
I'm looking at both ES and Q. NQ's already into that resistance area that I have myself. ES is not there yet. It's I have that at 840s, 840, 843. But we are seeing a hourly reversal, hourly 9 EMA reversal in both. We're into that 20 EMA resistance cloud. It is strong.
Big
though,
trade.
So it's I'm just waiting to see how the higher high, higher low structure continues. That can allow me to be patient here and wait until the trend does complete to even try and press the button.
GC, weekly minus one touch. GC, monthly minus one touch.
A lot of people reporting data issues or something. So
Big trade.
With what? Oh, really?
yeah, so just be careful.
Oh, yeah, mine is frozen. My price action is frozen. How's yours?
I see ticks coming in. I've got a special feed.
Big trade.
So cool. Merritt won the championship. So cool.
I don't know if you know this about me, but I was the featured trader qualifier 3 champion.
Thanks, Captain Obvious.
Cooper knows why too. It's about the chart shake. If you want things to go down, you start the shimmy shake. That's what does it.
Oh, there we go. Saying something. Is it on the web platform as well? Let me see.
I'm on a standard Ninja connection here. No issues for me. I'm loving this little feud in the chat. One guy's like, learn how to work a PC. The other guy's like, go wear a diaper. I'm here for it.
I'm going to put this here while I work on the platform. Just going to restart my Ninja.
Big trade. Big trade.
Okay, there we go. Looking better. We're into that 40s area.
Yeah, much better looking top right here.
This is where I want to short.
Yeah, chat in general, to bring things back to positive territory for you feuders in the chat with each other. Let's relax a little bit. It's a really, really good thing to, it's not a really good thing. It's mandatory. Everybody listen up, please. You gotta have your risk desk on speed dial. And you gotta know in a way that doesn't require to use your computer, which, by the way, might break, right? Might be inaccessible. You got to know your account number, right? So you gotta have a risk desk on speed dial, and you got to know your account number. Those are two mandatory risk management protocols for any trader.
Yes,
I agree with
to
room
that
550 there.
40s.
Always have a stop in, even if it's, a little bit away, kind of an emergency stop. Absolutely.
Let's see if we can put a new high to get to that 40s in ES, and then see if some exhaustion comes in.
Buyers came
Think in
back after that
probabilities,
little
not certainties.
potential capitulatory looking thing there. The time is not yet for me.
So far, no higher low into the 9 MA on the 2-minute here for me to even consider that short. ES remains moving.
Big trade.
Bit of a divergence here. NQ's been stalling for a bit, and ES finally reached that 40s zone. Ideally, we get a new high, higher low, higher high, and then at that point can set up just a mean reversion setup.
I'll short some.
What is it, ES or NQ?
ES. I don't really trade NQ anymore.
So this is the higher low here into the 9 MA. Let's see how we react. I can't really engage until we put in that higher low. Higher high, higher low, and then see if we do bounce to new highs, and then at that point continue to wait, or if we do lose it and then we reject back down. So I will continue to wait.
It's a mushy area in general here. There's a reason why, Chris and I are both essentially looking for, the same type of thing here. There's good market generated information to look for shorts in this region. Whether it works, neither one of us have a clue. Who knows? Who cares? That's not our job. But I will say this, the thing that detracts from this position is it's a big range of an area. Like I said, the market could easily go to 68.55, right? Which means I'm going to take a couple stop outs along the way. So it's not a very precise area. Doesn't mean it's not tradable. Yeah, with the jobs numbers and all this kind of stuff, I have day to day right now, I have no idea what's real and what's not in terms of what the econ calendar shows and what's coming out. So
Big trade.
It's a funny time.
NQ, plus one touch.
We have a higher low here in NQ. Oh, did we just take that out?
That was a move. Something happened right there. Somebody that was like a fat finger or something.
Let's see if I can get filled on a bounce.
Somebody
All right, let's
sold a little
see.
2000 lot. No big deal.
Oh, this should not be 8. I have the wrong ATM strat on. All right, we'll keep this.
Big trade.
I wanted a new high. I wanted a higher high, higher low, higher high, and then set up the reversal. I'm trying it here. See if we get that pullback. I had the wrong ATM presets, so I will have to stay with this for now. Let me do this manually.